All right. So we're diving into Oliver Velez and strategies for profiting on every trade. And you know me, always love a good trading book. But this one, this one's different.
Oh, yeah.
It's like he took a deep dive into the psychology of trading, rewiring your brain for the markets.
Yeah, and what's interesting is Velez, he's a technical analysis guru, right?
Yeah.
But he keeps emphasizing the real edge isn't some secret indicator.
It's all about mindset.
Exactly. It's all up here.
He even says, like, forget what you know about passive investing. He uses that example, Iomega, those,
The giant floppy disks.
Yes, they were huge. Then CDs show up, boom, stock crashes. Total dinosaur extinction event for your portfolio.
And that's his whole point, right?
Hmm.
Today's market, so tech-driven buy and hold, it's like holding on to, I don't know, a melting ice cube.
So what are we supposed to do?
Velez says, adapt, manage risk, know when to get out. Active trading, that's the name of the game.
Okay, so how do we do that without, getting totally eaten alive? He's got this 2-account system, right?
This is brilliant. One account for income, short-term, almost like guerrilla tactics, he calls them.
Guerrilla tactics.
Yeah, fast in, fast out, create that consistent cash flow. And then separate account, this one's for long-term wealth building. Let those positions ride out the storms.
So you've got one side generating income, the other one's steadily growing in the background. That's living the dream.
And the real magic. It's the psychological separation. Short-term, you need to be agile, quick decisions. Long-term, patience, tuning out the noise.
Makes sense. Trying to do both in one account would be like, I don't know, juggling chainsaws on a unicycle.
Huh.
But even with a system, fear still creeps in, doesn't it?
Fear, oh, it's every trader's best friend, right? But Velez, he digs into why we feel it. Uncertainty, lack of control, and get this, even our experiences in other fields.
What do you mean?
He gives this example. A doctor, amazing at their job, but in trading, they struggle to cut losses.
Because they're trained to fight for every patient.
Exactly. Or a lawyer, used to arguing any side, they might rationalize a losing position instead of, being objective.
Their strengths become weaknesses.
Exactly. So Velez's solution, a rock-solid trading plan. Write it down, almost like a contract with yourself. Your strategies, your risk management, everything.
Like having a trading buddy keeping you in check, even if it's just you and the charts. But even with a plan, those first 30 minutes of trading.intense.
The market's wildest hour. Volumes through the roof, market makers are jockeying for position, and newer traders, they can get swept up in the emotions, making impulsive decisions.
Like trying to order coffee during rush hour. You need a plan or you'll be lost in the chaos. What does Velez recommend for that?
Focus is key, he says. Pick a few stocks, know your entry and exit points cold. And your trading system, it needs to handle the pressure.
Preparation meets opportunity. Now, here's where Velez throws a curveball. He says we need to stop obsessing over the news.
That's funny, right? Seems counterintuitive.
Totally. I love staying informed.
But Velez argues the news, it's often lagging, it can be manipulated, and doesn't tell you how the market will react. He uses that example, AT&T. Positive news, right?
Right.
But the stock went down because technically it wasn't lining up.
So it's not the news itself, it's how the market reacts to it.
Precisely. Charts become your guide, not the headlines.
Speaking of charts, Velez is all about those multiple time frames, right? Like using different maps depending on your trip.
Exactly. Trading opportunities, even 5-minute charts for pinpointing entries and exits.
But he also says not to get too bogged down in the small details.
Right, zooming in too much, you lose the big picture.
And then, of course, there's the exit. Even the best entry means nothing if you don't know when to get out.
Like planning a road trip. Destination, arrival time, and how you're getting back. Velez warns about getting emotionally attached to trades. We've all done it.
Oh, totally. Like hoping that expired milk will magically become fresh again.
Exactly. He emphasizes the reward-to-risk ratio. How much can you gain versus how much you're risking?
So higher ratio means potentially more profit, but also more risk.
Finding the balance is key. Now, before we move on, he's got this fascinating concept. He calls them reversal times. Almost like,
hidden pockets of predictability in the trading day.
got it. It's like you're tapping into the market's rhythm, with those reversal times. But Velez, he says, don't stop there.
Yeah.
We got to see the bigger picture, the market cycles.
The ebb and flow, bull to bear, the whole shebang. How does he break it down?
He's got these 4 stages, right? Imagine this. Stage 1, accumulation, big institutional players. They're quietly scooping up undervalued stocks, setting the stage.
You're like those savvy shoppers getting the bargains before everyone else catches on.
Exactly. Then, boom, stage 2. The music's cranked up, volume explodes, those big price moves start happening.
And that's where FOMO kicks in, right? Everyone wants a piece of the action.
It's natural. But Velez, he says, don't chase the market. Stay disciplined. Wait for those high probability setups. Not every trade is a good trade.
It's about picking your battles, choosing the right dance partner.
Now the market's climbing. We hit stage 3. This is distribution. Those early institutional investors, they start taking profits, selling into the rally.
So the smart money's cashing out while everyone else is still piling in.
That's often how it plays out. And it's tricky, right? Because everyone's caught up in the euphoria. They miss those subtle signs that things are changing.
So how do we spot those red flags, those hints that the party might be ending soon?
Velez says, look for things like decreasing volume. Price ranges start narrowing. The market doesn't have that same energy. And watch out for those failed breakouts, where a stock tries to push higher but gets rejected.
It's like that moment at a party where the music dips, people start checking their phones. You realize maybe it's time to head out before it gets too late.
And if you ignore those signs, you might find yourself in stage 4, the dreaded correction, or even worse, a bear market.
Panic City.
People selling at any price, just trying to escape the drop. Velez, he says, recognize this stage early, protect your capital.
So it's less about making money, more about damage control.
Exactly. Batten down the hatches, weather the storm. It's not the time to be overly aggressive. The key here, understanding these cycles lets you adapt your game plan.
This is giving me a whole new way of looking at the market. Instead of random movements, I'm starting to see the underlying forces at play.
And that's what Velez is all about. He's teaching us to read the market, to understand its language. And speaking of reading, let's talk charts. He's got some powerful tools for analyzing those price movements, starting with support and resistance levels.
The classics. I always think of support like the floor and resistance like the ceiling.
Exactly. These price points, they're where a stock tends to encounter buying or selling pressure. Identifying them can help you anticipate reversals, breakouts, the whole 9 yards.
He's a big fan of moving averages, too. Those lines on the chart that help smooth out the noise and see the trends.
Absolutely. He often talks about the 20-period moving average, good for spotting short-term trends. And then there's the 200 period, that's your long-term outlook, like having a short-sighted and far-sighted view of the market, all in one place.
So if a stock is above its 20-day moving average, that's short-term strength, like a sprinter gaining speed.
You got it. And above the 200-day, think marathon runner. They're in it for the long haul. But Velez, he's not just looking at these things in isolation, right? It's all about connecting the dots.
Finding those patterns, those clues that tell a story.
He calls it confluence. You want multiple indicators lining up, confirming your analysis. For example, say a stock is nearing a key resistance level, but the volume is drying up and the moving averages are starting to roll over. That could be a warning sign.
Like the market's losing steam, getting ready to reverse.
Now, on top of those classic tools, Velez, he's got some of his own tricks up his sleeve. Remember those periods of crazy volatility we talked about? Well, he uses something called wide range bars.
These aren't your average price bars, are they?
These bars, they're like giants compared to the others. They often pop up during those volatile periods, signaling a potential shift in momentum, like the market suddenly woken up and decided to make a move.
So a wide range bar breaking above resistance, that can be a sign of a powerful breakout.
You got it. And on the flip side, if it breaks down below support, look out below. It could be a sharp drop. But here's the thing, even with the best charts, the most sophisticated indicators, Velez, he always reminds us, trading, it's as much about mastering your own psychology as it is about understanding the market.
It's true, isn't it? So easy to get swept up in the moment, like when the market's going crazy, you just want to ride that wave.
It's those emotions. That's where things get dangerous. And Velez, he's great at connecting those emotional extremes to what we're seeing on the charts.
Like you were talking about washouts before, right? Those moments where it's like a selling frenzy. Seems counterintuitive, but he sees those as potential buying opportunities.
It's like everyone's so panicked they're dumping their stocks at any price. Creates the perfect setup for a bounce back.
Because all that selling pressure, it kind of exhausts itself.
Exactly. He calls them capitulation points. When fear peaks, that's often when the big opportunities emerge.
But how do we spot them in real time? What's it look like on the charts?
Look for those extreme spikes in volume. For one wide range bars, those can be a tell, especially if they're breaking down through support levels.
Yeah.
And candlesticks. Keep an eye out for those long lower wicks. It's like the market's testing lower prices but getting rejected.
So we're basically looking for those moments where the market's freaking out, creating an opportunity to buy at a discount.
Now here's the flip side. Velez, he also warns about getting caught up in excessive optimism, when greed takes over.
When everyone thinks the market's going to go up forever.
He calls those blow-off tops. Often they're followed by a sharp correction, or even the start of a bear market.
So how do we tell the difference between a healthy rally and a blow-off top that's about to explode?
Parabolic price moves. Those are a big red flag. When a stock's chart goes practically vertical, and watch out for huge volume driven by hype, not fundamentals.
So, if everyone's saying a stock's going to the moon, but there's no real substance behind it, that's our cue to get out.
It's at least a time to be cautious, right? Velez stresses the importance of staying grounded, being willing to sell, even when everyone else is still buying.
It's about having the discipline to stick to your plan, even when it feels like you're missing out.
Now, to help us navigate these emotional swings, Velez talks about relative strength.
We touched on that earlier. Why is it so important?
It's all about comparing a stock's performance to the broader market or its sector.
Yeah.
Helps us find those companies that are either outperforming or underperforming.
So market's down, but a particular stock is holding steady or even going up. That's relative strength.
Exactly. Means there's something special about that company. It's more resilient to the downturn.
How can we use that in our own trading?
Velez, he uses it to identify potential leaders and laggards bull market. Look for stocks with relative strength. They're likely to keep outperforming bear market. Those showing relative weakness, they could be good shorting opportunities.
So we're looking for those stocks that are marching to their own beat no matter what the market's doing.
And here's where it gets really interesting. Combine relative strength with those reversal times we talked about.
It all connects.
Right, you're finding those strong or weak stocks, then timing your entries and exits around those key moments in the trading day.
This is like having a secret weapon, a decoder ring for the market. So as we wrap up this deep dive into strategies for profiting on every trade, what are the big takeaways?
Number one, trading is about mindset, just as much as it is about charts. Control your emotions, be disciplined, have a plan.
And keep learning. This book, it's packed with insights we've only just scratched the surface.
That's right. The market rewards those who are prepared, who adapt, and always keep searching for that edge.
So to everyone listening, take what you've learned, check out Velez's book, and see the difference it can make in your trading. And until next time, happy trading.